Hello and welcome to Crypto Weeklies. In this video, we analyze Bitcoin. None of the content is financial advice. We have machine learning based price forecast, regression analysis, estimated bull run target, and technical analysis. So let's get started. Over the last 7 days or so, the price of Bitcoin has been in a downturn. Especially now that of its recent highs of about 88k, price has capitulated to about 82.3 82k $300. Still the market cap is at around 1.6 trillion, whereas again the circulating supply is at around almost 20 million of the 21 million max supply. So let's get started how this affects the analysis. This all of these analysis are available on cryptoweeklies.com, the link on the bottom of your screen, all available for free. You don't have to pay or sign up for anything. Per this model, this is the price with respect to the 20-week moving average of Bitcoin. You can check out the model over here. This is the home page of the site. We are going and checking out the 20-week simple moving average based risk for Bitcoin. Right now, the 20-week simple moving average risk for Bitcoin is at 17% or 0.17. That means per this model, the price has relatively cooled off with respect to 20-week moving average. If we get rid of some of the highest risk bands, we can see that over here, especially throughout the bear market of 2020, like the middle of 2021, where there was a correction in the market, or in early 2022 and in late 2022, the risk levels for Bitcoin accumulation were low per the model. Again, this model did not identify the actual bottom. Again, this is just analyzing the simple moving average based risk. Right now, again, this model is signaling it's the second best time to DCA Bitcoin. And if the risks were to go to, let's say, the intermediate level at around 50, between 50 to 60% risk, again, as the market does eventually get heated. Again, there are no guarantees, but that is something that we saw essentially in 2021 as well as in 2024, both in March and December, between 50% and 70% risk. If the prices were to go to that point, per the model, the price for Bitcoin could be between, in the next iteration, could be between $111,000 and $116,000. So that's the moderate target per this model. I know the price right now is in a downturn, and the current support levels are more of an interest. So per this model, the AI based machine learning based price forecast, the support for Bitcoin's bottom in the next 6 months, per this model, is between 78k to about as low as about 66k. That is, again, if the downturn were to continue for the next 6 months. If there is a recovery within the next 6 months, the base case scenario for that recovery is between 82k and about 92k. That is, again, without any bullish uh, or euphoria phase in the market. If there is a one standard deviation bull case in the market, the price forecasted by the model is between 87k to about 131k for Bitcoin. Again, this model is developed using Bitcoin's historical price action as a variable, or as a train on its training data, and using machine learning techniques, seasonal ARIMA, LSTM, and XGBoost, to identify what are the potential one standard deviation ceiling and one standard deviation floor, using this predictive capability. If the purpose is to identify what is theoretical upside and downside, and what is the likely price action or the trend behind the price action, which is identified by this pink line, which says that all things equal, Bitcoin's price action tends to go up with time than more than down with time. And again, you can see that evidence by this chart, and this chart goes as back as about September 2014, so more than 10 years of data, essentially saying the even the lows that Bitcoin has had have a series of, even the macro lows are of higher highs and higher low nature. So if the two standard deviation or the euphoria case for Bitcoin were to pan out in 2025, which is again a post halving year, the price of Bitcoin could be between 91k to about 177k per this model. that is the 2 standard deviation or 95 percentile peak. If you are interested in following that in a tabular format, so the next 6 months, again the base case, let's say we are in middle of August of 2025, the base case is 91k for Bitcoin. There is a 68% chance that the price is between 66k and 124k. There is a 95% chance per the model the prices are between 47k and 163k. So that's how you interpret um, the price action in a tabular format. Again, in the per my interpretation, in the post halving years like in 2017 and 2021, again we only have two data points in this analysis. Usually there is a peak that occurs. Again, the debate is whether it has occurred in January February of 2025, or is there further upside as we go into 2026, which if you look at the 4-year market cycle, are if 2018 is an indication, again from January till December it was down only. In 2022 again similar story, from January till about December, again from 47k to about 16k. So potentially in 2026 per the 4-year cycle, again you can check those analysis over here to identify the ROI. This is Bitcoin across all years. So if we look at 2025, this is how it looked. 2024 looked different at this point in time. 2024 was quite different. In 2023, again I'll compare this with 2023. There was a downturn till about March, but then again the rally did pick up towards from the early March to early April time period. 2022, this was the bear market year for Bitcoin. uh, Quite similar to 2025 at this point in time. In 2018, a similar story. If we get rid of 2024, 2025 does look similar to 2018 or 2022 at this point in time. So again, that's one insight to derive from this analysis is not all post-halving years or pre-halving years or halving years look the same. This is the DCA model, which analyzes the regression based fair value. Per the regression based fair value, it identifies the risk levels if the market has heated too much or has cooled off. Again, per this model, the peak in March of 2024 was much more significant than in December of 2024, because this March 2024 peak was before the halving, and at that time the regression based fair value was 45k, whereas the actual price was at around 73k. Whereas in 2024 or around December of 2024, the fair value had reached 82k per the model, and the price reached about 106, 107k. Now the risk levels have gone down. Now the risk is per the model at around 35% or 0.35. It's in this middle of the range kind of risk band. And if per this model, if the prices do go to that green zone, which is the between 0.5 and 0.6 risk, the price for Bitcoin could be per the model at around 189k to about 220k. That's the bullish side of story for Bitcoin. The time weighted average price is again coming in at around 21k, because Bitcoin has had several uh, bull runs where the price does eventually go high and taking the time weighted average price up with it. I would imagine in the next few years, or towards late 2026, this blue line could extend somewhere at around between 28 sorry between uh, 30 to 35k, if we extrapolate that to an year and a half. So right now the time weighted average price risk for Bitcoin is at around 80%. So all things considered, the estimated bull run target for Bitcoin as a confluence of most of the models comes at around 257k, with weighted risk at about 31%. That is assuming that the weighted risk goes to 100%. Again, there are no guarantees that prices top at around 100%. To take a conservative estimate, um, a 60 to 80% of the 250k price target makes the most amount of sense. 60% of 250k would be somewhere at around 150k, and 80% would be at around 200k. So if you take a median value at around 175k, that becomes more of a realistic case than the 250k target at this point in time of the cycle. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.